Before we look ahead to 2019, we must reflect a little bit on a company that did get itself into all kinds of trouble this year and now faces the potential of a class action lawsuit. That's Tiger Brands, reeling from the listeriosis crisis, facing a class action lawsuit now by victims of the infection. 2019, how's it going to play for that company and others in what's quite a depressed consumer market, but in a share market where valuations are looking very tasty indeed? Quick thought on Tiger Brands. I discussed it with Paul about 6 months ago, and I said, there's still water to run under this particular bridge, and it feels like that uncertainty will persist well into 2019 until we get clarity on class actions. We haven't had a great big class action, successful class action suit beyond mine workers' health issues in the consumer space, certainly ever, I don't think, Michael.
Yeah, so Tiger Brands management saying, look guys, we want this to go away as quickly as possible, and they seem to be helping along the class action to get it through the courts. I think Tiger Brands is even setting up a call centre that victims can call in. Tiger Brands have also said that they've got insurance to cover a lot of this. So from a share perspective, you need this out of the way and in the past. But it looks like management also took the opportunity with the listeriosis thing to throw a few other things into the mix with the last reporting period. But long term...
If you've got bad news, get rid of all the bad news as quickly as you possibly can.
Exactly, because everyone only focuses on the one thing. And then when you release next year, you say, look how great our comparable figures are. But Tiger Brands has brands that are very difficult to replicate, and I use stuff because my parents used it and my kids would probably use it as well, and Tiger Brands controls all of those. So
there's only one tomato sauce in the world, and it's that one. Let's talk about 2019. This time last year, we were ANC elective conference, we were going into the Ramaphoria period, and we sort of had the first quarter of Ramaphoria, then we had Rama reality set in the second quarter, then Rama crisis in the third quarter. Now there's a Rama kind of, it's probably going to be okay. We're going towards elections by May. We've got a bit of growth going on, interest rates are a little bit higher, currency seems a bit steadier, markets seem tempting, but still a VUCA world. Okay. Dare I use the term that we're going into in 2019? How are you feeling like throwing some money at the problem?
Yeah, let's take a bit of stock here. I mean, valuations are looking very attractive. We think it provides a very attractive buying opportunity at these levels.
So you just go to Satrix and you say to Satrix, give me the top 40 index.
So for investors who don't really understand stock picking and who can't actually do that themselves, we would advise go indexation, lower your costs, make sure you don't make any mistakes. Investors who are savvy, who understand markets a little bit, we'd advise two things: buy good quality companies and diversify your portfolio to a reasonable extent. And it's very easy to find very good quality companies trading at very good valuations, and you can diversify at the same time. You can look at Naspers, looking very attractive from a valuation perspective. We spoke about that. Let's not belabor that point.
Put it in Naspers.
Red or black? Absolutely wouldn't do that. I mean, you need to diversify.
But this time last year, when it's gone from 2.8 to 4, he's going to feel like,
well, look, Naspers is down 18% this year. It's the first time it's been down year on year for I don't know how long. I think it used to be doubling every 18 months.
Sunroff is down from 100 to 2. It's the first time in I don't know how many years that it's done.
And let's speak about diversification. Why do you need that? It takes emotions out of investing. So we spoke earlier about dollar cost averaging and managing to invest every month on a disciplined basis. When you've got a diversified portfolio, it actually automatically does that for you as well, because it's not the whole market that collapses 30-40%. The market falls 10. Some stocks will be up, some will be down effectively. That diversification allows you to actually stay calm and to actually work on a dollar cost averaging kind of basis. So diversify to some extent, but not to a completely illogical extent, but make sure you've got some global stocks in your portfolio, domestic stocks as well.
Isn't this is the greatest opportunity we've had in a very long time to diversify and to get money out and put money offshore? I mean, we talk about global diversification, to go and buy an index, the S&P 500, which Warren Buffett likes so much, for example. I mean, Rands stronger than it's been in a while.
A lot more South Africans are getting a lot more comfortable with the idea of taking money offshore, and you don't sometimes even have to take it offshore. Like you say, you can go buy the S&P 500 denominated in rands. I mean, that's an easy way to get exposure to US markets and to the dollar in some ways. But you can also use your R1 million discretionary allowance, take it offshore. Banks are now comfortable doing it. I remember when our clients were taking money offshore 3-4 years ago, you would rock up at the Forex desk and they were like, what do you mean you want to take money offshore? So that culture is now changing, and we live in a global village. Why do you want all your eggs in rands?
But what also history shows us is that the JSE is capable of massive outperformance after years of underperformance. My question to you then is 2019 that year of outperformance?
I'm going to say I hope so, Bruce.
Okay. That's not the answer I was looking for. Hope is a good thing. I mean, I hope so too.
I mean, we're optimistic. I mean, I just talk about Rand hedges as well. I mean, 60% of the JSE earnings are from offshore as well. I mean, look at Naspers, BTI, all the mining companies and the like.
Just give me a straight answer. Is 2019 the year of JSE outperformance?
We think so. We think so.
Will the JSE deliver a return north of 20% in rands next year?
Difficult to say 20, but at least 15 we think is something you can bank on.
Look, the S&P 500 averages 5% a year. And that's its long-term average. So if the JSE does 6%, then technically we've outperformed, surely.
It all depends on the currency, doesn't it?
It does. Are we talking in rands or are we talking in dollars?
We need. I mean, in a globalized world, you need to be benchmarking yourself against the best markets in the world. South Africans, in real terms, are globally half as rich as they were probably 5 years ago, simply because the US has outperformed the way it has, and the JSE
Ramaphosa 2.0 next year, Bruce, will be back at the 11 rand, 10 rand to the dollar, and just in that will give us our outperformance locally.
Should all things go politically smoothly? I mean, do we have to worry about our politics next year?
I think the other thing let's talk about the politics in a second, but I mean, if you just look at emerging markets and how they've underperformed this year, next year with trade wars off, the Fed going on hold, emerging markets are likely to outperform as well. So if EM outperforms, South Africa is likely to outperform as well, unless our politics goes negatively. So everything hinges on the elections. If we can have a stable election with a reasonable ANC victory and a firm mandate given to our president to actually now get policy certainty, put his infrastructure programs in place, put PPPs in place and sort out our parastatals forever, SAA, Eskom, Transnet.
Keep the lights on.
Keep the lights on, making sure you've got water supply, confidence will return, the economy can start growing again, and we're confident that might happen.
At that point, we will leave it. So the hope, a wing and a prayer. That's all we have for this week. My thanks to Rayhaan Joosub and to Michael Treherne, commentators wrapping up November and giving us a really good overview, not only of the year that has been 2018, but also giving us quite an optimistic outlook for 2019. Your feedback via Twitter. The handle for that at ENCA or at Bruce Business using the hashtag ENCA Taking Stock. Until next time, bye-bye.